Something is wrong in the world of artificial intelligence. You hear the promises every day. AI will change everything. It will cure diseases. It will make us all rich. Men like Sam Altman and Satya Nadella tell us this is the future. They spend billions of dollars to prove it. But what if all this money is wrong? What if the promises are just stories? We are building a massive, glittering tower on a foundation of sand. The sheer weight of the spending, the debt, the hype, could bring it all crashing down. This is not just a risk. For some parts of tech, it could be lethal. This is the path to the first real tech Great Depression. The story they sell is shiny. It is full of smart machines and endless progress. Look at the demos from OpenAI, from Anthropic. They're impressive. They feel like magic, but magic is not a business model. The sales pitch for big tech used to be simple. Companies like Microsoft, Google, Amazon were cash-heavy and asset-light. They made software. Software could grow almost infinitely with little cost. That story is now over. In a couple of years, they've flipped the script, spending more on AI infrastructure than they make from operations. They are now net cash borrowers. Amazon sold tens of billions in bonds. Demand came in weaker than usual. Costs are rising, profits are not guaranteed. They're buying GPUs, building data centers, and locking into long-term spending commitments. This path is unsustainable. It leads to a cliff. We're talking hundreds of billions this year, potentially $1 trillion next year. To justify that, AI would need to print trillions in new profit, fast. Where is that business? Where are the customers? The demand isn't there. Companies are capping employee AI spending. The system is running on fumes and borrowed money. The heart of the AI build-out is the GPU, Graphics Processing Unit. These chips train and run modern AI models. But a GPU is useless without high-bandwidth memory, HBM. SK Hynix, Samsung, and Micron control the world's HBM supply, and they can set prices. They've signaled more price hikes. They have no reason not to. Hyperscalers are desperate. It's a gold rush and a choke point. Margins are astonishing. Micron reported nearly 85% gross margins. More production shifts to HBM, creating shortages elsewhere, pushing up the cost of RAM and storage across electronics. Your next phone or laptop could cost more. Why? Giants like Google and Meta are buying up capacity for data centers. Analysts expect HBM prices could jump 90% year over year by 2027. A single high-end rack can carry hundreds of thousands of dollars of HBM and rising. At gigawatt scale, HBM alone runs into billions. NVIDIA is estimated to drive about 65% of HBM demand, a load-bearing role. If their sales slow, the whole memory market could crack. Costs are at the mercy of 3 suppliers. New fabs take years and billions. Prices only go one way for now, up. For all the billions being spent, one simple question remains. Where is the profit? AI companies like OpenAI and Anthropic are not profitable. They burn cash fast. They boast in run rates, forward guesses that assume the good times roll forever. Big tech is no better. They say AI boosts the business, but won't break out AI revenues. Why? The numbers are probably bad. If AI printed money, they'd shout the profits from the rooftops. Sure, LLMs can write code or copy, but they also make things up, and they're costly to run. Value to most businesses is still unproven. Many rushed in. Now they're capping usage. Even Elon Musk's teams. This lack of a clear business model is the fatal flaw. All this debt is built on faith, the belief that profits will appear. Models get a bit better. The economics don't. We're throwing compute at a miracle that may never come. This isn't innovation. This is a prayer. And a very expensive one. The AI industry runs on massive, long-term commitments. These aren't handshakes. They're multi-decade, multi-billion contracts. Anthropic signed a 20-year deal for 400 megawatts of capacity. OpenAI and others are on the hook for over $1 trillion in spending, all premised on infinite demand. They need to cut prices to attract customers, but raise revenue to justify the spend. They can't do both. Meanwhile, customers are pulling back. The structure is fragile. When markets turn, the lawyers will try to cancel everything they can. Can hyperscalers cancel NVIDIA orders? Can labs escape data center leases? If Google cancels TPUs or Microsoft pulls back on OpenAI, shockwaves hit the entire chain. This isn't .com. It's centralized, the biggest spenders on Earth. If they fall hard, and take a lot with them. First to go, unbuilt data centers, and GPUs sitting in warehouses, fire sales, write-downs, venture capital dries up. Lenders and private credit funds, often tied to pensions, take hits. Jobs go. Communities feel it. We're already seeing it. We stand at a critical moment. The AI hype train is roaring ahead, but the bridge is out. Debt is piling up. Costs are spiraling. Profits look like a mirage. Shiny demos aren't worth a lethal crash. The solution isn't to abandon AI. The tech has potential, but potential isn't a business. We need proof and accountability. Show real customers getting real, sustainable value. Until then, slow down. Test, prove, then build. Don't chase the mirage. Look for real business models. If we move with caution, prudence, and healthy skepticism, tech will serve us, not bankrupt us. The choice is ours. Let's make the right one. We can keep our sense of wonder, robots, labs, breakthroughs, while staying clear-eyed about costs and reality. Jensen Huang's NVIDIA sits at the center of this spending storm. Sundar Pichai's Google pushes Gemini to lead the future of AI. Satya Nadella bets big alongside OpenAI to transform Microsoft's stack. Sam Altman's OpenAI drives model hype and massive compute demand. Elon Musk's xAI and Grok race for mindshare and more GPUs. Anthropic advances safety-first models while signing giant power deals. AGI remains a distant idea, worthy of study, not of reckless spending. GPT, Gemini, Grok, each new demo sparks excitement and more questions. Media and analysts can amplify momentum, sometimes past reason. We're not anti-AI, we're pro-reality. Ask for proof, protect your capital, build carefully. That's how we get a future worth having.